Welcome, welcome to the Everyday Trader. This is Greg Jensen. Glad to be with you today. Eric, how are you?
Hey, and it's Eric Hale from Trader Oasis and also OptionsANIMAL. I got my halo effect going on this time of year. The sun coming in from behind.
Well, how'd your Thanksgiving turn out?
Oh, we celebrated on Saturday because my daughter's a nurse. On the pellet grill, I spatchcocked a turkey and smoked it. Not a smoker, true smoker, but a pellet grill. So low temperature. One of the best turkeys I've ever made.
My dad did the same thing. I drove to my parents' house and he threw a turkey on his wood pellet smoker grill. It actually, his Traeger, and delicious. Ate way too much food. I think we had like all my whole family's there. I think we had like 14 different pies.
Ooh.
And we devoured them.
I know Heather, your wife, is a great baker, so I'm sure she made some good ones. Actually made the best apple pie that I ever made. The trick was in a Dutch oven, I cooked all the tomato. I'm sorry, but I cooked all the apples ahead of time and then drained them, so that it wasn't so mushy. And then, my wife said best apple pie, plus a good mixture of Gala and Granny Smith apple. So I had the right amount of sweetness and tartness and an awesome crust. Yeah, this worked out really good. One of the best I've ever made.
Hey, that was a good recording. I'm going to go eat lunch now.
Yeah, you're making me hungry too. So thank goodness I have some leftovers. So we're here to talk about the market. So thanks for bearing with us with that. It's kind of a snooze fest right now in what's happening. Markets are basically churning sideways. If we look at the SPX, you can see that the intraday moves have kind of slowed down. We've got less volatility that's spelling out also in the VIX, with the VIX dropping down into the lower 20s, also the VIX futures dropping down. So it's typical for this sort of year. We get some interesting things that do happen around now. There are some interesting news stories that we wanted to talk about. Which one did you want to address first?
The interesting one the last days. Let's jump into Twitter and Apple and the interesting little story that's going on between those two right now. Elon Musk, of course, is a very polarizing figure. And a brilliant man. I don't think either one of us would step back from Elon being brilliant. I think most everyone would say he's brilliant, whether you agree with his views of society, like this tweet right there, this being the battle for the future of civilization. If free speech is lost, even in America, tyranny is all that lies ahead. I agree with him 100% on this. It's interesting that the arguments that he's making right now are based not only about his takeover of Twitter and what he's been doing to try to show everyone the actual happenings that happened for the last several years on Twitter and how people have been banned for their opinions on things. I'm really interested to hear all this. What's the other interesting part is how both Google and Apple, and maybe more specifically Apple, have threatened to remove Twitter from the App Store. And I don't know. Do you have an opinion on that? Is Tim Cook turning to the dark side, or is this what's going on?
So I'm a libertarian, card-carrying member. I lean a more little L libertarian than the big L, but so freedom of speech is one of the most important things to me. It's very core. And I think, it's really, I don't know if you saw that tweet that was up there a second ago, but Elon Musk saying that like the very future of civilization is based on, if it's either freedom of speech or tyranny. I think that's a little bit overdone. I am a big fan of Elon. I really like what he's doing. I think he definitely thinks a little bit differently, but I got to tell you, this whole thing feels contrived. Bear with me a second. So last night we watched the new Apple TV Spirited. which is a fantastic movie. Actually way better than I expected. So it's got Ryan Reynolds and Will Ferrell in it. And it is a musical. I didn't know it was as musical as it is, because if you told me that, I probably wouldn't have watched it. But my wife, who hates musicals, we loved it. It gets a 6.6 rating on IMDb, but I thought it was fantastic. But Ryan Reynolds plays a character who manipulates social media to accomplish his aims. And so he puts fake narrative stories out there to get people fired up to make things happen. And it's a key theme in the story. I thought it's pretty interesting. But what's going on here? Definitely there's some narrative manipulation in here. There does feel like there's a strategy behind there. And I think the big picture, and you hit it, and that is that Apple and Google have tremendous control over apps. They charge a 30% fee for apps that get sold, or anything that gets sold through the Apple Store specifically. So, whether the issue is really over that, or is it really over freedom of speech? I'm not exactly sure. And Musk has even threatened that he's going to create his own phone. So it's an awkward time for us being Apple shareholders right now, because there's some other things that are going on beyond this drama. I mean, I'm not sure how you make money on this. Certainly if Musk created a phone, that would be bad for Apple. If Apple loses significant revenue through their services line, which is the App Store, among other products that they sell for services. So, I mean, if they took a 50% haircut in terms of their margins for the App Store, it wouldn't bode well. So I don't see this really turning out well for Apple. If Twitter gets kicked off the App Store, we're going to have a lot of fanboys that are upset. By the way, what happens when Twitter fanboys and Apple fanboys fight? It's pretty funny. If you,
I haven't seen it. I'm gonna have to Google it. That's funny.
Yeah, there's a whole bunch of video responses of basically nerds fighting nerds. So, and I do represent that. I fall into the category of both Apple and Twitter fanboy. So, I think the bigger question here is what's going on with Apple. It also brings into what's happening in China.
Yeah, that's just what I was gonna throw in. The situation in China is a little unnerving. There's a lot of people who are saying that this is the biggest political event that's happened in China since Tiananmen Square, with the protests right now over the lockdown in regards to COVID. And it's not just in one city, it's countrywide right now. And I was reading an interesting thing again in regards to Apple and its ties to China, and how controlled Apple is by China. Now, whether this actually happened or not, I don't know, but someone was talking about that Apple actually made an update to their system that, normally you can go around with your phone, with your iPhone, and allow for airdropping things. Yeah. And you can share files, and that China forced Apple, or maybe they didn't force them, but Apple did change the policy that they did not allow them to airdrop anymore, because there were files supposedly going around from person to person in these. Well,
it's an authoritarian, communist dictatorship, and they have a lot of control over social media and what gets published on these different apps. And so the airdrop is a way for you to send files wirelessly. And so that was apparently what was happening, is how some of these videos are making their way out of China. And I mean, I don't know if it's true or not, but Apple's been accused of shutting down or eliminating that feature, or somehow limiting it.
Right. That's what I was saying too, is it's really hard for us to verify, because we're not there in China, that this is actually happening. It's somebody reporting that it's happening. But regardless, Apple shares, as you can see, have really had a rough couple of days.
Yeah, over the past 5 days, you saw a big drop in Apple. I mean, Apple's getting, for being the kind of company that tries to espouse morals, aligning themselves with a country that's welding people's doors closed for COVID lockdowns, this zero COVID policy. I'll tell you where though I would put my money on this, and that is I'd put my money with China. So I'm putting my personal opinions aside from what I want to see happen. Every culture, society, whatever, has sort of its defining issue that's multi-generational. And for us, maybe I think it might be if you think of what is sort of most important topics, if you ask people, what's the zeitgeist of Americans, I do think terrorism, what happened 9/11 is kind of a big deal. If you go to Germany, it's debt tends to be the long-term thing. Of course, what's happened with them with runaway inflation around World War I and World War II, and debt is actually considered like a swear word in Germany. For China, it's revolution, and what happened with the People's Revolution, that memory still lingers with them. And I know that the Chinese leaders are afraid that they could be overthrown because it's happened before, and as a result, they work very. And this is my opinion. This is I'm reading this from other people. So I think China is going to do what it can to quell this. I don't know if you saw Leland Miller. Is it Leland from China?
Yeah, the guy that does the China Beige book. Yeah.
Yeah, we met him in Jackson Hole, and he's got a piece out that's basically that he's siding with China's probably going to win this battle. So it's unfortunate in us, who, especially those of us who hold the values of freedom and liberty as being very important. Unfortunately, I don't. It's a country that has different morals and different values. So how does this play out for China? For Apple is, these are interesting things to talk about, but let's talk about investing. I think in the short term, it's going to be bad for Apple because Apple's got a couple things. There's the Twitter thing that I don't know how that, maybe they come to a resolution and Cook and Musk get together and have a kumbaya. So maybe that gets resolved. I think that probably will figure its way out. China is a bigger issue because there's reports of shortages of phones right now, that people aren't able to get the new iPhone 14 due to what's happening, and certainly zero locking down and shutting down the factories is going to have a big impact as well.
Yeah, I think that's the bigger issue right now in regards to Apple's shares, is exactly what you're saying, is the potential shortages that are going to result again, that we had hopefully we're getting through finally. We know that was part of the cause of inflation, and now that China is shutting down again, how long are they going to shut down? How big of an impact is this going to have on the supply chain again because they're doing it? We know that companies have not been able to onshore their manufacturing capabilities in just a couple of years since COVID. We know that's a multi-year, if not decade-long process of companies being able to bring their own production facilities back here. And I don't think all companies are going to go through that either, even though I know that's sometimes what they say from a PR standpoint. So I think that's what's pressuring Apple shares, and probably what's caused the rally that we've had in the S&P to kind of stagnate a little bit. We kind of ran up, the overall S&P ran up and hit resistance a couple of days ago. We'd had a nice move going and kind of hit a brick wall. And you have to imagine that the largest component of the S&P being Apple, and not by a little bit, by a long shot, they are the largest component. It has to have some impact on the S&P failing to push through that 200-day moving average too.
Yeah, so that's interesting to keep an eye on how that's going to play out. With Apple, do you have any insight to share, any thoughts on where do we see Apple maybe find a bottom or support, or do you have key levels? Is there anything you're looking at, and how would you approach this if you wanted to trade or you were trading Apple?
I think it still could come down. I think we had talked about this even the last time we had talked about Apple being a little expensive. And from a PE standpoint, they're a little bit elevated from where they were prior to COVID. They're trading right now, I want to say at around a 23. Yeah, there it is right there on your screen. a 23 PE, which, you know, maybe in the high teens, 18 PE, you start to say that Apple starts to become attractive from a fundamental standpoint again. But I think even at these levels, even after the recent sell-off, they're still a little bit stretched. If we're going into an economy next year that may see earnings slow down, and, you know, whether we go into recession or not, I know that was our last episode. We talked about the likelihood of going into recession because of our inverted yield curve. I think that's going to impact Apple if we do. If people tighten their belts a little bit and they can't get phones, we may see both the P and the E come down to still keep the PE elevated is the problem. So it may go lower. I don't know what the right price is. Price to earnings is probably my best thing, but like I say, that could continue even if the stock price slides. If the earnings slide too, that PE still stays elevated. So I don't know. If you look at a chart, mid 130s, maybe 135 is where it's bounced the last few times. 138. We're only a few dollars from that.
Yeah. So bouncing off of my screen here. There we go. Yeah. Looking at where we're at, I think this 140 level will be key. Buffett, it is his biggest holding. If we were to look at his portfolio, which you can look at the 13Fs and see, he does own, let's see, $124 billion worth of Apple. So almost 900 million shares. 900 million, almost 1 billion shares. Crazy. Yeah. 894 million shares. Lot of shares, and he had been buying in the 150s in the past. So I agree, though. We talked last time. I think the traditional PE ratio for Apple has been in the high teens, so that 18-19 range wouldn't be unreasonable. So right now I got a little caught off guard, and I regret not collaring on Monday with the news over the weekend. But here we are on Tuesday. And I'm seeing it down a little bit lower because I have long stock right now and no shares, but I'm watching that 140 level and see there. So I'll take a close look at it, maybe a collar trade or a cover call to protect what I have. Switching gears, we mentioned the yield curve inversion. So we've got an update. We're seeing the yield curve. This is looking at the difference between the 10-year Treasury and the 3-month Treasury. And we're at an extreme, almost all-time low level of inversion. We had 0.77 or negative 0.77 back in 2000, which led to a very significant recession. So this yield curve can both be an indicator of recession, can actually cause a recession. So this deepening is getting a little bit of attention, and recession calls are on the rise, something to keep an eye on. And I think, we talked about the VIX, right? We talked about yield curve inversion. I guess the other thing that we wanted to, do you have any thoughts on that? Or are we going to transition to, I guess, one other thing, looking at the Fed, I guess. So the December meeting, we're honing in on this 50-point basis hike. Looks like a 67% probability now in December meeting, which is only 15 days away and 8 minutes before we get that next update from Jerome Powell. That brings us to what's really, I think, driving the market is a combination from all of the Fed speakers that we have going on throughout the rest of the week. We've got pretty much everybody speaking. Here. I'm actually Charlie Evans is speaking on Friday. I'm actually going to be at that event live at the Chicago Federal Reserve Board. I'm attending the annual economic symposium, which I've been to in the past. I've been recognized for accuracy in forecasting. So my forecast is submitted. We'll see how that turns out. So
was it Williams yesterday who spoke and talked? Yeah, I think it was. He's the vice chair of the FOMC.
Yeah.
The member of the president of the New York Fed spoke yesterday and talked about, there it is on your calendar. said we haven't done enough yet, even though the Fed's been raising rates. He doesn't see enough work done on inflation yet to say that they're going to slow down. My guess is we're going to get the same conversation tomorrow from Jerome Powell. Those are the two most important voices, right, in the Federal Reserve, in the Open Market Committee, are Powell and Williams. But yeah, it's still the story. You still can't fight what the Fed is doing. I think the market had its little rally the last month or so, month and a half. And we have a Fed meeting next week. Yeah, I think this is the markets are, I think best case scenario right now, markets are going to go sideways. I think there's a chance markets actually roll over right now, especially if we get some pretty hawkish commentary out of Fed Chair Powell tomorrow. I think that's going to be the news dominating event for the week in an otherwise, to be honest, kind of relatively quiet week. We've come out of the holiday with a pretty good rally, and I think we're giving a little bit of it back right now.
Right. There's some other things that we wanted to talk about in those sort of themes that happen around calendars. I'm a big fan of the Stock Traders Almanac, which I like to look at. And we're getting into December where some things that tend to happen. One of the biggest things is that we see retail traders looking to capture tax loss. So you get this thing, tax loss harvesting, where anybody's got a losing position will close that position, potentially with the idea of buying it back later outside of the wash sale rule. So we tend to see a peak in that happen around the 15th of December. So over the next couple of weeks, we probably should look at some of the names that are down to get beat up a little bit more. And there's one thing that they call, there's a few sort of names for these effects that we see. You might have heard of the Santa Claus rally or the January effect, both of which are coming up. But there's one that they call the only free lunch in Wall Street. And that is, with amazing accuracy, stocks that are at their 52-week low on December 15th outperform unbelievably through February 15th. So that's something to keep an eye on for people who are looking ahead. We talk about also the January effect, which I think it's a little early to talk about that. We're still November here, but we do see, and then a Santa Claus rally, which may or may not come. And if Santa Claus doesn't come, tends to be a bearish market. But there's some things to look at that we'll talk about maybe in other episodes here.
I think if there's a stock that fits that for the year, it's got to be Meta. Don't you think? I mean, Facebook has just been at Meta, right? They've been absolutely destroyed this year. And, you know, that's one that I'm sure it was a really big holding for a lot of people. It's a very very widely held stock. There's going to be a lot of tax loss selling that's going to happen with Meta, I think, over the next couple of weeks. And then it might be an interesting trade, the end of the year, into February.
Maybe an interesting, maybe a call calendar or call diagonal. So the short call benefits from a downward move, and then we get a spike back up later.
Did you know there are 20 members of the S&P 500 that are down over 50% this year?
Wow.
NVIDIA, Adobe, AMD, PayPal, Netflix, Etsy, Meta. Yeah, there's some big names in there that I think fit into this category, exactly what you're talking about. You know, good companies. Tesla is not very far from that, to be honest. They're down right about 50% this year. You know, you and I talked about Tesla being a potential trade last time we were looking at this. Amazon's down 46% this year. There's some big names, I think, that could fit into that category of having some tax loss selling this calendar year that create some interesting trades going into the first part of next year.
Yeah, I think you're right. It's December 1st, people start looking at their portfolios and thinking about taxes for next year. So something to keep an eye on. So, well, I think that's about all that I wanted to share. Did you have anything else you want to talk about other than reminding people to like and subscribe and ask comments?
Yeah,
Actually, we should
no.
talk about Las Vegas maybe for people that are interested.
Yeah, no, Options Animals doing a summit. As those of you who are students with us know, we're going to be going to Las Vegas on December 10th and 11th. So that's just a couple of weeks away. And yeah, they're great 2-day conference full of content. We have a couple hundred people signed up for it. It's going to be a really good event. It is sold out for those of you who want to try to attend live. But we do have the option to subscribe to watch it on a live stream. If you want details about that, reach out to us at OptionsANIMAL. We'll make that available for you. But yeah, it's always a good event when we have these summits, and it's good from the standpoint of we talk real-time markets. We're there with people interacting and live questions. But as much as anything, it's great to be in a group of people who are like-minded as far as, we're all trading options and learning together, and you'll make some fantastic connections with people. For those of you who have never been and are going, I know that a handful of you are listening to that as well. Looking forward to meeting you in person at the Las Vegas Summit. It's going to be at the Marriott, which one? The JW Marriott there in Las Vegas. So.
Yeah. Which is a really, really nice property. It's not on the strip, but it's a beautiful property, great rooms, nice, comfortable beds. Yeah. So it'll be a fun time. And for those of you that are interested in attending, you can reach out to us at OptionsANIMal. And like I said, if you haven't registered, you're interested, you can sign up for live streaming to see the event from where you're at. So click there to find out more. And we'll look forward to seeing you folks on the next Everyday Trader.
Thanks, everybody.
See you later.